Good morning everyone. I hope all of you are doing amazingly well and welcome to this quick discussion of RTP for CE Inter May 25 examination. Initially I thought I would expect the students to solve it on their own, but then there are some key issues that you need to check when we are discussing the RTPs. Some important conceptual issues that I wanted to highlight so that you can be prepared for the examination. Just if you can give me a confirmation by commenting whether the audio, video in this shared screen is properly visible or not, and is my audio proper or not. If you find it low or high, please let me know in the comment section. And before we start the RTP discussion, one more good news for you. I have uploaded a lot of revisions video in this 100% advanced accounting revision playlist. You can see it over here, right? So you can go to our channel and you can check for 100% revision, whatever is there. There you can find the revision for many chapters. If you want any specific chapter to be included here, we'll be launching some more videos subsequently. But if you want some more chapters on priority basis, just put a comment on this video. Audio is low. Okay, let me slightly increase the audio. I hope now it would be better. Okay, so just put a comment on this video, which chapter, which standard do you want me to upload the revision video on a priority basis. I will be doing that. Currently you can see here, you have AS1, you have AS 19, 15, 2 and AS11, AS24, those are uploaded. Any more chapters you want, feel free to comment over here and I will be more than happy to share that with you. But that will be available only till the day before the examination. Okay, so that after that we will remove the revision videos. So you can make use of it for your revision purpose as well. Now coming to the RTP, let us straight away jump into RTP without wasting much of our time. So they have slightly increased the conceptual testing in this given RTP, and that is what we can expect in the examination as well. So let's start with the first question. Now the first three questions are MCQ questions. Always remember, whenever you are looking at a long MCQ question, long case scenario question, and in fact I have also discussed separately case scenarios that will also be uploaded. That's already available in fact, and you can have a look at it as well. Now case scenario based question, here we have only small case scenario, so we'll directly read the question, but otherwise you should always read the question first. Okay, question means this part: what will be the value of inventory in the books and what disclosure should be given in the financial statements. Now let's read it. Let's look at this. In the books of G Limited, closing inventory as at 31st March amounts to 10,40,000 on the basis of FIFO method. The company decides to change from FIFO method to weighted average method for ascertaining the cost of inventory. On the basis of weighted average, closing inventory amounts to 8,80,000. So now they have changed to what? 8,80,000. Currently it is at 10,40,000. Realizable value of inventory as on 31st March amounts to 12 lakhs. Now all of us know inventory is valued at cost or net realizable value, whichever is lower. Correct? Now what is the cost as per revised estimate? 8,80,000. And what is the NRV? 12 lakhs. Lower is 8,80,000. So we'll value at 8,80,000. Now let's look at the question. The value of the inventory will be 8,80,000 and the fact that the valuation method has changed to be disclosed in the financial statement. Is it correct? Yes, of course it is correct. But in the examination, don't directly just read one option and say, oh, this is the correct option, let me take it. Read the other options also. Read the other options also. Don't make this mistake in the examination. The value of inventory will be 12 lakhs. Of course not. So this is not a correct option. Value of inventory will be 12 lakhs. This is also not a correct option. The value of inventory will be 8,80,000 and full disclosure with the amount. The valuation method has changed to be disclosed in the financial statement. Now if you see, here also they have said the valuation method has changed to be disclosed in the financial statement. But friends, please remember, whenever there is a change in the accounting policy, we have to also disclose what is the impact of the change in the current period and in the subsequent period. Now here we also need to give the amount of valuation method with the amount the valuation method has changed. How much is the impact of the change? That also needs to be given. So Don't hurry in the examination. Read the options. Even though you felt A is correct, but actual correct option is option D. Alright. So I am opening parallelly the answers also so that we can immediately cross check. Correct answer is option number A. Alright. Then A Limited has balance of 17,15,000 in the loan account with State Finance Corporation, which is inclusive of 1,15,000 for interest accrued but not due. Interest accrued but not due is my current liability. The loan is secured by hypothecation of plant and machinery. So out of 17,15,000, my loan is how much? My loan is only 16 lakhs. As per Schedule 3, loan is to be disclosed in the balance sheet as follows. Disclose rupees 16 lakhs as a secured loan under long-term borrowings. Yes. Disclose 16 lakhs as secured loan under long-term borrowings and 1,15,000 under short-term borrowings. I have seen a lot of students get confused. Current maturities of long-term debt is a short-term borrowing, but this 1,15,000 is interest to be shown under other current liabilities. Disclose 16 lakhs as a secured loan and 115 under current liability. This is correct. No disclosure of 1,15,000 is incorrect. So option C is the correct option. Then most byproducts as well as scrap or waste material by their nature are immaterial. These are measured at net realizable value. So you can directly measure it at net realizable value. Nothing complicated. So D, C and D, only 3 MCQs. Now moving on to the descriptive part. What do you mean by accrual in reference to AS1? Also specify any 3 reasons for accrual basis accounting. This is a straightforward theory question that you can directly have a look at it. Now, this one is important. Compute the value of closing inventory from the following information. And I have been telling again and again, this is one type of question which has a very high chance to come up in the examination. Closing balance of raw material 700 units. Cost price including GST 280. ITC available 25. So you will do 280 minus 25 because they have said including GST. Freight inward 35 you will include in the cost of raw material. Handling charges include in the cost of raw material. So 280 minus 35, 280 minus 35, sorry, 280 plus 35 minus 25 plus 20, we get 310. So cost of raw material is 310. Replacement cost is 200. Now don't apply the principle replacement cost or cost whichever is lower, not that way. We have to check the multiple scenarios. Closing balance of finished goods 1800 units, material consumed 280. Now you may say, sir, it is 310 here, how material consumed is 280? Maybe we don't use a full unit of raw material for one good. Okay. Direct labor 80, direct overhead 40. So 280 plus 80 plus 40. Direct overhead means variable overhead. Direct overhead means variable overhead. Total fixed overhead for 3 lakh was 3,60,000 on a normal capacity of 36,000 unit. Actual production has been 30,000. Now please remember, we will revise the overhead recovery rate only when the actual production is more. If the actual production is less, we will not revise. So 3,60,000 divided by 36,000, fixed overhead is 10 itself. So 280 plus 80, 360, 400, cost is 410. So this is raw material cost, this is finished goods cost. Calculate the value of closing stock when NRV of finished goods is 500 per unit. If NRV is 500, inventory is valued at cost or net realizable value, whichever is lower. So this is NRV 500, cost 410, so it will be valued at 410. Many a times what students do is they just compute 410 and they leave it here. You should not do that. You should multiply that with 1800 units. Where if finished goods are sold above cost, raw material will be valued at cost. So raw material will be 700 multiplied by 310 and finished goods would be your 1800 multiplied by 410. That is how we would do. 700 multiplied by 310, 1800 multiplied by 410. This is the answer that the examiner is expecting from you. Just don't say 310 and 410 and leave it there. Okay. In the second scenario, NRV is 380. If NRV is 380, then we'll value finished goods at what? We'll value finished goods at 380. And then for raw material, we'll value it at replacement cost if this is lower than the cost. So replacement cost is 200, we'll value it at 200 for the second scenario. 200 and 380 for the second scenario. Simple. Any questions here? I don't think any questions. Any questions here? Then let's look at the next one. From the following data of Vishnu Limited, prepare cash flow statement from operating activities using direct method. Many a times when we see that balance sheet is given and income statement is given, we may think they want us to prepare it using indirect method. Please remember, they have specifically asked direct method. Direct method means how much is the cash collected and how much is the cash paid, we have to handle separately. So they have given sales, cost of sales, other income, interest income. Interest income is my investing activity. Fire insurance claim received, operating or investing or financing, because fire insurance is, if they have not mentioned anything, this is with respect to operating. And what do we do with that fire insurance claim received? It is an extraordinary item and it has to be disclosed separately. So in the cash flow statement also, you have to disclose it separately. Please keep this point in mind. Depreciation is non-cash. Admin and selling expenses, your operating. Interest expenses, financing. Foreign exchange loss. Now foreign exchange loss is what you have to see. Based on that, we have to give the treatment. Net profit before tax and extraordinary income, 1462, income tax 95, net profit 1367. Trade receivable and trade payable include amounts relating to credit sale and credit purchase only. So they have given trade receivable opening, closing. They have given trade payable opening, closing. Please be careful. This is opening. Okay, I am marking here. This is opening balance and this is closing balance. Opening, closing. So accordingly, you will calculate. Sometimes what happens is they give 23 first and 24 subsequently. So we are used to, first is first year, second is second year. Don't do that. Just think this is, read the date, closing and opening. Alright. Now what do we need to do? We need to know how much cash has been collected from the customers. We need to know how much of the cash has been paid to the creditors. Foreign exchange loss represents increment in liability of long-term borrowing due to exchange rate fluctuation between acquisition date and balance sheet date. Means what? This is a part of financing activity, we will not consider. Alright. Then have they given us information of how much tax has been paid? They have not given, but we have opening provision for tax, opening, closing and expense for the period. So what we will do is, we will prepare trade receivable account, opening balance 1,88,000, closing balance 2,05,000 and sale 85,50,000. Sir, how much is cash, how much is credit? We don't have the information, so you assume entire thing is credit. 85,50. So sales is 85,50. 188 plus 85,50 minus 205, we get 8533,000. This is cash collected from customers. Same question, I'll also solve it using the indirect method. So we have absolute clarity for the examination. Okay, 8533. So let us see. Yeah, 8533. Same way you can prepare cash paid to supplier, payment for admin expenses, entire P&L amount and payment of income tax. So for payment of income tax, you will create provision for taxation account. You have the opening balance by balance brought down. You have the closing balance to balance carried down, and you have by P&L account. So by doing that, you can directly by balance brought down to balance carried down by P&L account. Balancing figure is tax paid. Okay. By doing that, you get payment of income tax and then extraordinary item to be disclosed separately. Net cash from operating activity 14,16,000. Now say for example, the same thing was given as a direct method, indirect method. Now if you have to do using indirect method, where will we start from? We will start from net profit before taxes. So what is the net profit before tax? We'll start from that place. Net profit before tax is 1462. So net profit is 1462. Okay. Then out of all of this, fire insurance is a separate item. You will add back, you will reduce the insurance claim received. Any income which has to be considered separately, you will deduct. So this is 110. Okay. Then depreciation non-cash expense will add back plus 24, this number. Then interest expense finance plus 36. Then foreign exchange loss. This foreign exchange loss is relating to what? Foreign exchange loss is relating to a borrowing. So that also will not consider. We will add back. Then interest income 20,000 is not our income for operating activities. Will reduce that. So 1462 minus 110 plus 24 plus 36 plus 18 minus 20, we get 1410. Okay. Then we have to check for changes. Inventory 165 became 120. Always consider opening minus closing. 165 minus 120, you get 45. So you will add 45. Then 188 became 205. 188 minus 205 minus 17. Then trade payable 215 became 195. 195 minus 215. 195 minus 215, we get minus 20. Then income tax paid. So income tax paid, you have provision for tax, opening provision 65 plus current year 95 minus closing balance 48, we get 112. So income tax paid 112, and that extraordinary item will disclose separately. Okay. So 1410 plus 45 minus 17 minus 20, you get 1418, minus 112, you get 1306, plus extraordinary item of 110 plus 110, if you do, you get 1416. So same question, you can solve it in both ways. Please remember, you have to calculate cash flow before taxes, taxes paid, then extraordinary item. 1416, we got the same number. Okay, so this just for your practice, that you can calculate it in both the ways. Foreign loss. So if there is a foreign currency loss, that will get automatically adjusted when you calculate the opening minus closing for foreign currency payable. Okay, that is where it will happen. That is operating, that is the financing activity. Contingency and event occurring after the balance sheet date. Smart Limited closes the books on every year 31st March. The financial statement for 31st March 24 are to be approved by the authority on 30th June. So anything that happens between 1st of April till 30th of June, that is your subsequent event. Then you have to check whether it is adjusting or not adjusting. During the first quarter of 24-25, so that is in this period only, 24-25 Q1, the following events has taken place and the accountant wants your advice. Smart has an inventory of 50 stitching machines costing 5,500 per machine as on 31st March of 24. The company is expecting a heavy decline in the demand in the next year. The inventories are valued at cost or NRV, whichever is lower. We all know that. During the month of April, due to fall in demand, the price have gone down drastically. The company has sold machines at a price of 4,000 per machine. Now, whether we should consider it adjusting or not, always remember, is there a condition existing on the balance sheet date? Is there a condition existing on the balance sheet date? Now, in this case, the company is already expecting a decline in demand next year. So, is there a condition on the balance sheet date? Yes. Subsequently, when they sold at 4,000 per machine, that we gave us evidence that subsequent value has gone down. So this will be considered as adjusting event, and you will consider the revised value, that is 4,000 per machine, for your valuation purpose. Okay, so this is an adjusting event. Fire broke out in company's godown on 15th April. The company's estimated loss of 25 lakhs, which is 75% is recoverable from the insurance company. So 15th April means it is not a adjusting event because event itself has happened subsequently. So accordingly, if the going concern assumption is valid, nothing is required. If the going concern assumption is not valid, then you will have to prepare the financial statements on the basis of going concern assumption not being valid. Insurance claim, again, will not disclose it unless it is confirmed. You will not recognize it unless it is confirmed by the insurance company. Now, if 75% is recoverable, most likely this will not impact the going concern. Okay, so this is a non-adjusting event. Company has entered into a sale agreement of 30th of March to sell a property for a consideration of 750, which is being carried in the books at 5,50,000. The transfer of risk and reward is complete in the month of May. So, as per AS9, revenue will be recognized when the risk and rewards are transferred. But sir, this is not a goods, but even for that also the risk and rewards has to be transferred. If the risk and rewards are not transferred, then you will not recognize the profit or loss. So when has it transferred in May. So in this period you will recognize. This is also non-adjusting. The company has received during the year 22-23 a government grant of 15 lakhs for purchase of a machine. The company has received a notice for refund of the grant on 15th of June due to violation of some condition of grant during 23-24. So the grant conditions were violated when 23-24. If grant conditions are violated in 23-24, it is a existing condition and which is confirmed on 15th of June before the issuance of financial statement. So this will be considered as adjusting event. I would suggest each one of you to go through the answers of all of these, because in this particular chapter, getting to the answer, writing the answer properly is very important. Okay. Then the accountant of Hira Limited has sought your opinion with relevant reasons whether the following transactions will be treated as change in accounting policy or not for the year ended 31st March. Please advise in the situations in accordance with the respective standard. Till the previous year, furniture was depreciated on SLM basis over 5 years. From the current year, life has been changed to 3 years. Now tell me, is change in useful life of an asset for the purpose of depreciation, is it a change in accounting policy or is it a change in accounting estimate? It is a change in accounting estimate. So this will be considered as change in accounting estimate. Management decided to pay pension to those employees who retired after completing 5 years of service. Such employees will get a pension of 20,000 per month. Earlier there was no such scheme. Introduction of new scheme, introduction of new items, a new accounting type of transaction has come into place. That is not a change in accounting policy, neither a change in estimate. Sorry. During the year 31st March, there was change in cost formula in measuring the cost of inventories. Change in cost formula for measuring cost of inventory is change in accounting policy, right? Then, AP Limited, a construction contractor, undertakes the construction of a commercial complex for K Limited. AP submitted separate proposals for each of the 3 units. A single agreement is entered into between the 2 parties. The agreement lays down the value of each of the units at 50, 60 and 75, lays down the completion time for each unit. Comment whether AP should treat it as a single contract or 3 separate contracts. Now here, whether it is single or 3 separate, you have to see if separate proposals have been submitted, if they have been negotiated independently. Now each price has been given separately, separate proposals have been submitted, separate timeline for completion has been given. So in that case, this will be a separate contract. Okay. Now when you answer this, please bear in mind to write down the theory. Separate proposals, subject to separate negotiation, cost can be identified separately, then you have to treat it as a separate contract. Okay. Then, on 1st of December, GR Construction undertook a contract to construct a building for 45 lakhs. So this is the transaction price. On 31st March, the company found that it had already spent 32.5 lakhs. Sir, I want to ask whether questions can come from MCQ booklet issued by ICA, but I feel most of the things are RTP, MTP question, possibility is less. See, as far as MCQ is concerned, right, you should not look for where will the institute ask the question from. For MCQ, what is needed is what is your conceptual clarity, because questions can be asked from anywhere. They can use some questions from your study material, convert that to MCQ and give it to you. And these days with generative AI, you can actually create questions, using AI as well. And they might be, using some MCQs, and they may ask AI to create similar MCQs. So for MCQ, my humble suggestion is, if you are conceptually clear, no need to worry, you will be able to handle the questions in the examination. Okay, it is about how you read the question and how you answer the question in the examination. Alright? Okay. So 32.5 already spent. Additional cost of completion is 15.1. So total cost is 32.5 plus 15.1, it is 47.6. What amount should be charged to revenue in the final accounts for the year ended 31st March of 24? Now first we have to see what is the percentage completed. Percentage completed is 32.5 divided by 47.6. So 47.6 divided by 32.5 divided is equal to 68.27%. 68.27%. So out of 45 lakhs into 45 lakhs if I do, revenue should be recognized of 30.72. Then cost of 32.5 should be recognized. How much is the loss? 30.72 minus 32.5. Loss is 1.78. How much is the total loss? 47.6 minus 45, 2.6 is the total loss. So minus 2.6 plus 2.6 plus 2.6. 0.82 of provision is required. This is a typical question which comes up in the examination time and again. Okay, so total cost 47.6, percentage 68.28, revenue 30.73. How much did we take? We took 30.72. They have rounded it off to 30.73. Then total foreseeable loss is 2.6. So the excess loss that is not recognized, that also has to be recognized immediately, which you have already computed. Given below are the information of a company. Goods 50,000 were sold on 18th March, but at the request of the buyer, these were delivered on 15th of April. This is again a standard question. If risk and rewards have been transferred, if buyer has requested us not to dispatch the goods and hold the goods, then we can recognize revenue in March 24 itself. Here also, I request all of you to note down accounting standard 459. Okay, these are all, and also accounting standard 18. These are all a lot of descriptive based question. So please complete all previous year questions. Compiler is available on the app. Okay, if you want, I'll just show that to you. Sorry. Both are available, advanced accounting notes and advanced accounting compiler, both of these are available. So what I would suggest is go through this compiler, read each and every question and see how that has been answered for this specific standard 4, 5, 9 and 18 specific standards are mentioned. Please go through that because descriptive question comes and you must be able to answer that.
It's 10:30.
On 13th of January, goods of 125 were sent on consignment basis, of which 20% goods are lying unsold with the consignee as on 31st March. So we can recognize revenue only of up to 80%. Now these kind of questions also can be given as MCQs in the examinations. Okay. Then 1 lakh worth of goods were sold on approval basis. The period of approval was 3 months, after which they were considered sold. Buyer sent approval for 75% up to 31st Jan and no approval or disapproval received for the remaining goods till 31st March. When did we send? 1st of December. How many months? 3 months. So December, January, February. Similar question was asked in one of the previous examination where students said that 1st of January was the dispatch date. They considered 1st of April as the ending date. Please don't do that. If it is at the beginning of the month, it basically means that month, next month and the subsequent month. So December, January, February. They have not got any confirmation till 31st March. So what we should do? For 100% we should recognize revenue. 75% approval received and 25% deemed approval. Okay, that is one more thing. Then ACE 10. Srishti Limited contracted with a supplier to purchase machinery which is to be installed in its department A in 3 months' time. 3 months' time. Special foundation were required for the machinery which were to be prepared within this supply lead time. Cost of the site preparation and laying the foundation were 141,870. Now this 141,870, is this a cost of PPA? Definitely yes. These activities were supervised by a technician during the entire period who is employed for this purpose for 45,000 per month. So 45,000 into 3, that also will be cost of machinery. The technician services were given by department B, which billed services at 49,500. This is not considered. Any internal profit which is realized or which the department, one department charges to another department, that has to be eliminated. We'll do it only at the cost basis. The machine was purchased for 158,34,000 inclusive of IGST 12%, for which input credit is available. If input credit is available, this 158,34 represents 112%. We need to know how much is 100%. So 158,34 divided by 112 multiplied by 100, if you do, you get 141,375. 141,375. 141,375. Site preparation added, 3 months into 49,000, that is also added. Then 55,770 transportation charges were incurred, that is also added, and 30,000 supervisory cost, that is also added. Ascertain the amount at which machinery should be capitalized, considering IGST credit is availed by Srishti. Internally booked profit should be eliminated. They will not give that information in the question. They will not give that information in the question. You have to assume that yes, internal profits are to be eliminated. Alright. Those of you who have joined in late, I had discussed earlier also, most of these are important questions and revisions for this is available in a separate playlist which you can have a look at it. A Limited has reported 85,000 as tax profit in the first quarter and expects a loss of 125,000 each in subsequent quarters, has corporate tax slab of 20% on first 20,000 earnings and 40% on additional tax expense. Okay, I'll do that. I'll do that after I finish this questions set, then I'll take it up. Okay. Legal Limited is engaged in manufacturing of rubber for its plant. It required a machinery of latest technology. It usually resorts to long-term borrowing, foreign currency borrowing for its fund requirement. On 1st April, it borrowed 1 million from International Funding Agency when the exchange rate was 63. The funds were used for acquiring machineries on the same date to be used in 3 different plants. Useful life of the machinery is 10 years and the residual value is 30 lakhs. Earlier also, company used to purchase machinery out of foreign borrowings. The exchange difference arising on such borrowings were charged to P&L and were not capitalized, even though the company had to option to capitalize. Now for this new purchase machinery, they are interested to avail the option of capitalizing the same to the cost of asset. Exchange rate on 31st March is 62. Assume that Legal Limited is not having any old long-term foreign currency borrowing except for the amount borrowed for the machinery purchase. Comment whether Legal Limited can capitalize the exchange difference. If yes, calculate the depreciation amount. Can Legal Limited capitalize? Can Legal Limited take the option when they have not taken the option earlier? Can Legal Limited take the option when they have not taken the option earlier? Most of you would, generally in examination you may think because they have not taken option earlier, they cannot take the option now, but that is not the condition. If you look at para 46A of Accounting Standard 11, it says any company which has availed the option earlier or for any other company, means any company can avail. Once you have availed that option, you have to continue with that option. That is a different thing. But it is not that previously if you have not availed, now also you can't avail. So you can definitely avail. So they can avail. Now what have they given? 1 million. 1 million means $1 million means how much? 10 lakhs. Please keep this number calculation in mind. 6 zeros or 10 lakhs. 1 million loan is taken at 63. How much is the loan value now? Loan value now is 62. Loan value now is 62 and the residual value is 30 lakhs. So, if my liability reduces from 63, if it has come down to 62, then I have a gain of 1 into 10 lakhs. My gain is total of 10 lakhs. Now this gain of 10 lakhs, I will not add it to the cost of machine because this is a gain. So if I have a gain, I will reduce it from the cost of the machine. Okay, that is the only treatment that you must be aware of in this particular case. So exchange difference gain is how much? 10 lakhs. Exchange difference gain is how much? 10 lakhs. Original cost of asset is 63 million, 6.3 crores. So 63 minus 1, now we are left with 62. 62 million and 30 lakhs is the residual value. 30 lakhs only they mentioned, right? $30 lakhs means 3 million. If you are confused between million and lakhs, just convert these millions into lakhs and do the questions. Okay. So residual value is 30. So 62 minus 30 divided by 10, the depreciation is 5.9. Only thing is, you should not say that because previously they have not availed, now they cannot avail. That is not the rule. 46A allows any company which wants to avail the particular option. Accounting for government grants. XY Limited has set up its business in designated backward area which entitles the company to receive from the government of India subsidy of 20% of cost of investment. Now when a grant is not given with related to a specific asset, or when a grant is not related to revenue in nature, then what do we call this? If it is given as a percentage of overall investment, we call it grant in the nature of promoter contribution. Having fulfilled all the conditions, the company on its investment of 75 crores received 15 crores as subsidy. The company wants to treat this receipt as an item of revenue. Can we do it? Do that? We cannot do it because it is a grant in the nature of promoter's contribution and that has to be credited to capital reserve. Then this one is a standard question. Okay, this one is a standard question. You can solve it on your own. There is nothing I have to explain you in this particular investment accounting. If you want, I have also I'll also be uploading investment accounting revision. There you can have a look at it, because this investment accounting, the thing that I want to share with you is how to score marks. A lot of times we get scared when we see investment accounting question and we try to ignore it or leave it. But please remember, if this question comes from, let us say, 8 marks or 10 marks, the way you will get marks is for every correct entry. So 1, 2, 3, 4, 5, 6, 7, 8, 9. Right? There are 9 entries. Okay. For every 2 correct entries, you may get 1 mark. So if you do 9 entries correctly, you will get 4.5 mark, and then remaining marks will be given for your respective working note. So my request here is, even if you are confused in 1 or 2 adjustment, don't leave the question. Now only point that you have to keep in mind here is, here they have said due dates of interest are 30th June and 31st December. So when you prepare ledger account on 1st of April, there will be interest accrued from January till March. I want you to practice this question on your own, and in the examination also, please, how much ever you can write in this particular question, please write, because for every correct entry you get half mark. For every correct entry you get half mark. So even if half of it you can do it correctly with a couple of working notes correctly, you can get out of 10, I would expect around 5 to 6 marks, which is a very good number. Alright. Then accounting for amalgamation. The summarized balance sheet of GAN Limited and Kiran Limited as on 31st March are given below. Liabilities, share capital 650, 500, so GAN and Kiran. 10% preference share capital, reserves, general reserve, P&L debit balance. Non-current liabilities, debentures, loan, current liabilities, bank OD, trade payable and dividend payable. Non-current assets, PPE, investment, this has current assets, trade receivable, cash at bank 140. So here it is cash at bank and here it is bank overdraft. Alright. GAN Limited has acquired the business of Kiran. GAN acquired business of Kiran on 31st March as per the following scheme of merger. So typically this will be amalgamation in the nature of merger. Amalgamation in the nature of merger, unless there are conditions which indicates that it is in the nature of purchase. Banks agree to waive 50% loan of GAN Limited. So GAN Limited has loan how much? 15 lakhs of overdraft and loan is 40. So they are talking about this loan. half of the loan is waived off. So this looks like what? An internal reconstruction question. GAN will reduce its shares to 2 per share and then consolidate 5 such shares into 1 share of 10 each. Now here, first you have to pass the entry to bring it down to 2, then you will have to pass the entry to consolidate it to 10 per share. So first, you will reduce to 2 per share, so 10 becomes 2. Then consolidate means what? You will take 5 shares, it is kind of reverse split, and then you will increase the value. GAN will issue 2 equity shares for 3 shares of Kiran Limited. New shares are to be issued at 20, each having a face value of 10. GAN will issue 2 for 3 shares of Kiran. So, how many shares of Kiran are here? 600. 600 is the total value, 600 lakhs. So, 600 divided by 10, you have 60 lakh shares. 60 divided by 3 multiplied by 2 is the number of shares, that is 40 lakhs. Valued at what amount? Valued at 20. So 40 lakhs into 20, 800 lakhs is the purchase consideration. Preference shareholders of Kiran Limited will be paid off by issuing equivalent number of 10% preference shares of GAN Limited. So Kiran Limited preference shares 200, 100 each. So 200 by 100 means 2 lakh shares. 2 lakhs you will issue an equivalent number of shares of 100 at a price of 105. So purchase consideration is 2 into 105. Dividend of Kiran Limited will be paid after the merger to the shareholders of Kiran Limited. So even dividend payable has been taken over. Trade payables of GAN Limited include 50 lakhs payable to Kiran Limited. This is an intercompany transaction. You will offset it after the acquisition. Pass the journal entries in the book of GAN and prepare the balance sheet. So first, reconstruction entries of reduction of loan, then equity share capital 10 has become 2. So first you will do the reduction, and then this 2 face value has become 10. Again you will transfer that from 2 rupees share capital to 10 rupees share capital. Then whatever is the reconstruction account profit 20 plus 520, you will use it to write off the debit balance in P&L, and the balance will be transferred to capital reserve. Okay. This one small tip for the examination: unless they ask you to write off goodwill or any other intangible asset, you should not write off. You should write off only the debit balance in P&L and any other fictitious asset. Then purchase consideration 40 lakhs, 2 shares of GAN for every 3 shares, and preference shareholders 2 lakhs into 105, 40 lakhs into 20. So 40 lakhs is the number of shares you have computed, into 20, 800 we already calculated, and 2 into 105, 210, 1010 is the purchase consideration. So business purchase to liquidator 1010. Then you will take over all the assets on book value basis, because they have not told us whether it is, whether the value changes or not. So PPE, investment, trade receivable, cash in bank, trade payable, dividend, debenture, debenture, all of that will be taken over at book value. Business purchase account 1010, this is your purchase consideration. Any difference will be adjusted against the reserves. Okay. Then you will issue equity share capital, preference share capital, and security premium for equity share capital and preference share capital. So that will be done. Trade payable, trade receivable, you will cancel it out. Dividend payable, you will set it off. Now in these type of questions where 2 type of transactions are involved, be very careful while preparing the balance sheet. What you have to do, ensure is every entry, loan from bank, it is reduced by 20 lakhs. So reduce the loan account when you are preparing the balance sheet. Equity share capital has now come down to how much? 130. So now you will consider 130 plus whatever new shares you have issued. That is, I think, 400. So 400 plus 130, 530. And very important to write the note, how many shares have been issued for consideration other than cash. For same thing for preference shares also. Then you have issued equity share capital, you will add it to equity share capital. Preference share capital, you will add it to preference share capital. Securities premium, you will add it to securities premium. Trade payable, trade receivables, both these balances you will reduce by 50. And dividend payable, you will reduce by 60. Bank account, you will reduce by 60. Now please remember, we have bank OD here. In the question, if you see, we have bank OD. we have bank OD, and then we take cash at bank of this company. So you will combine both of these and present it at a net item. Or you can present it as separate items also. But if bank OD is there and you have cash at bank, typically you would offset that and you would present it as a single item. On borrowing cost, U Limited has obtained a term loan of 620 lakhs for a complete renovation and modernization of its factory on 1st of April. Plant and machinery was acquired under the modernization scheme and installation was completed on 30th of April. An expenditure of 510 lakhs was incurred on installation. 54 lakhs has been advanced to supplier for additional asset which were received on or before 30th of April of 23. Please remember it is 30th April of 24 and borrowing was 1st of April of 23. So substantial period is there. Additional asset has taken substantial period of time. So for this additional asset also, advance that has been paid is for qualifying asset. And the balance 56 lakhs has been used as working capital. So very simple. First, from 68.2 lakhs of interest paid, out of 620, 510 is for qualifying asset, 54 lakhs is also for qualifying asset, and balance amount has to be expensed. Standard borrowing cost question. Related party, SP Hotels Limited enters into an agreement with Mr. A running its hotel for a fixed return payable to the latter every year. The contract involves day-to-day management of the hotel while all financial and operating policy decisions are taken by board of directors of the company. Mr. A does not own any voting power in SP. Would he be considered as related party? SP enters into an agreement for Mr. A for a fixed return. The contract involves day-to-day management and all the decisions are taken by board of directors. So Mr. A is just running the operations of the hotel. Just because Mr. A is running the operations of hotel, it does not make him the related party. That is how you have to answer this question. Sun Limited wishes to obtain, when it comes to leases, what I have observed is a lot of students who want to skip AS 19, AS 15 in the examination. I would say don't skip because the type of questions that come from these standards are simple. Okay, so once I have revised the content that is available on my playlist, and if you look at just the past exam paper questions, if at all a question comes in the examination, my guarantee you will score 5 out of 5 in this question. So don't skip. See, I know the Leases standard is long, the ACE 15 standard is long, but my humble request is don't skip that particular standard. Just go through my revision videos and solve the questions from past exam paper. Similar question if it comes, it is sure shot 5 out of 5 marks for you. Okay, I know the leases, the disclosures are very much lengthier. ACE 15, there are so many technical terms. I completely understand that, but don't skip this chapter because it's a highly scoring chapter. Sun Limited wishes to obtain a machine costing 30 lakhs by the way of lease. The effective life of the machine is 14 years, but the company requires only for the 3 years. It enters into an agreement with Star Limited for a lease renter of 3 lakhs payable in arrears. Payable in arrears means at the end of the period. At the end of each year, and the implicit rate is 15%. Chief Accountant of Sun Limited is not sure about the treatment of these lease rentals and seeks your advice. Very, very open-ended question. Now, what do we need to do? First, we have to decide whether it is an operating lease or a finance lease. Option to purchase, they have not given anything. Compulsory purchase also, they have not given anything. Useful life is 14, we are using only for 3. So, again, an operating lease. Then we need present value of lease payment. So, present value of lease payment is 3 lakhs into 3.36. 3 into 3.36, 10 lakhs, 8,000 divided by 14 lakhs, divided by 30 lakhs. It covers only 33% of the lease payment. So this is an operating lease. If it is an operating lease, then you will recognize the lease rentals on SLM basis over the life of the lease. Earnings per share, this is one more question where there are only 2 or 3 types: basic earnings per share, weighted average number of equity shares calculation, diluted earnings per share, and rights issue. Only 4 things you need to do. So this also, my request is don't skip. 4 and you can score 5 out of 5 in an earnings per share question. That is the approach you have to take. The following information relates to XYZ Limited for year ended 31st March of 24. Net profit for the year after tax 3750. Number of equity shares 5 lakhs. Convertible debentures 8% convertible debentures 50,000. Equity shares to be issued on conversion 55. Calculate basic and diluted. Basic is very simple. 37 lakhs 50,000 divided by 5 lakhs. This is number of equity shares, not rupees, I think. Okay, 7.5. Now, if these debentures get converted, what is the interest saved? 50,000 into 8, 4 lakhs. 50,000 into 100, 50 lakhs, into 8%, 4 lakhs, into 0.7. So, 4 lakhs into 1 minus tax rate will be the interest saved. Interest saved is 280,000 and 37 lakh 50,000 is the earnings. You add these two, 280 plus 3750, we get 4030 divided by 5 lakhs 55,000 shares divided by 555, you get 7.26. So that is the diluted EPS. $7.26 per share. Sahas Limited is engaged in manufacturing of electric home appliances. The company is in the process of finalizing its account for the year ended 31st March and needs your expert advice on the following issues. The company has its plant at 3 different locations. It has to shut down one of its plant due to internal reasons. The said plant site is under rental agreement until 31st March. Okay, so you have to shut down the plant. The rent per month is 80,000. So you have to pay a month of per month of 80,000. If the company cancels, it has to pay a penalty amount to 6 months rent. The company has an option to sublet the site at a rent of 45,000 per month. So if you cancel the agreement, you have to pay 6 months rent. So that is 4,80,000. The company has an option to sublet the site. So if I sublet the site, when is this? 31st March and 31st March 24, I have the option. So if I sublet the site, 80,000 I need to pay the rental to the other company, minus I will get 45,000. I will get 45,000. For how many months? 12 months. So 80,000 minus 45,000 into 12 months if I do, I get 4,20,000. Alright. So 480 if I cancel the contract, 420 if I don't cancel the contract. What will a normal person do? They will not cancel the contract. So minimum of these two, this is a loss. Minimum of these two laws should be provided as a loss for onerous contract. Okay, onerous. O-N-E-R-O-U-S. Case has been filed against the company in the consumer court and the notice for levy of penalty of 20 lakhs has been received. The company has appointed a lawyer to defend the case for a fee of 2 lakhs. 50% of the fees has been paid. Balance 50% will be paid after finalization. 75% chances that the penalty may not be levied. So there are 75% chances that penalty will not be levied. There are 25% chances that the penalty may be levied. So we need to disclose a contingent liability for this case. Then fee 2 lakh is the fee. 50% has been paid. You have already expensed this. Balance will be paid up after finalization, but you have already committed to that. So the balance 50% also should be provided. These type of questions are very good candidates for being asked as MCQs. The company had committed to supply a consignment worth 1 crore to one of its dealers by the year end. As per the contract, if delivery is not made on time, a compensation of 15% of the value is to be paid. While the consignment was in transit, one of the trucks carrying goods of 30 lakhs met with an accident. It was, however, covered by insurance. According to the surveyor's report, the policy amount is collectible subject to 10% deduction. Before closing the books, the company has received the information that the policy amount has been processed and the dealer has also claimed for the compensation. So what happened? 30 lakhs worth of goods, they have met with an accident. So what you have to give? 15% of 30 lakhs penalty has to be given, or 15% of full 1 crore depending on how you interpret the contract. Then 30 lakhs of claim has been filed with the insurance company. They will give us 10% less. So for 90% value, we can record a receivable. Then this entire 30 lakhs of goods that has been lost, for that we need to book an expense. Okay, so that is how you have to approach it. Now, one question asked by Lakshmi. A Limited has reported 85,000 as profit in the first quarter, Q1. Then a loss of 125 in each in subsequent quarter, Q2 minus 1,25,000, Q3 minus 1,25,000, Q4 minus 1,25,000. They have a corporate tax slab of 20% on the first 20,000 earnings and 40% additional tax after 20,000, 40% additional. Okay, so Lakshmi, can you clarify whether you mentioned 1,85,000 or 185, the numbers, because accordingly the calculation would change. Loss of, I was just checking it, loss has to be 25,000, not 1,25,000. So 85 minus 25 minus 25 minus 25, your 10,000 is the total profit. On 10,000, what is your applicable rate of tax? 20%. So for the first quarter, what you have to do is 85,000 into 20%, you have to provide a tax of 17,000. For the second quarter, there is a loss, so it will be a kind of benefit. So 25,000 into 20%, 5,000 here, minus 5,000 here, and minus 5,000 here. Okay, that is how you have to work out. All right. I hope the session was useful to all of you. And loss is 25,000. So this is what it is, right? This is how you have to calculate, because 20% is the applicable rate. I hope the session was useful. As I mentioned earlier, the revision videos, I have uploaded some of them already in the YouTube based on what standard or which chapter you want. I am providing it till the examination. Okay. Welcome, Lakshmi. And thanks a lot everyone for joining in. Prepare well. Be confident that you will do well in the examination. One last thing before I wind up the session. Don't ignore amalgamation, consolidation and internal reconstruction in exams. These are high scoring topics. Even if you make 1 or 2 mistakes, you can still score 8 to 10 marks in each of these topics, even if there is 1 or 2 difficult adjustment. So please don't waste time. And for any 14 marks question, don't spend more than 35 minutes. I've seen, the other day I was doing a marathon at ICI, and then I realized that one of the students spent 50 marks for a particular question, not 50 marks, 50 minutes for a particular question, and he messed up other questions. So that you should not be doing. Now, after 35 minutes also, if you are not able to solve, means you will not be able to solve. Accept it, move on to the next question. Thanks a lot for joining in, and all the best.